Rule of thumb is these days you can't build anything for less than $200 a square foot in California.
Is a very hot topic.
It's almost a gimme. So you're basically going to get renter's coverage and combine it with your auto. You're going to save on the auto what it is for the renters, and you'll typically satisfy your landlord requests because most of them require it. They may not be checking. There's a lot of change happening in the space, and I think it's going to continue like that.
Hey everybody, welcome to the Sean San Jose Real Estate Podcast, where we talk about everything real estate related. I'm your host, Sean San Jose. I'm a realtor and investor. We have agents international and national. So if you're looking to buy or sell a home anywhere in the world, reach out to me. Would love to get you connected with some of our top agents around the country. So today I have a very special guest. He's a great friend of mine. I call him Mikey Mo. His name is Michael Mo, and he owns Mo Insurance, which he founded in 2015 in Westlake Village, writing all lines of insurance except healthcare insurance, and is now licensed in 30 plus states here in the U.S. Growing up in the restaurant business since the age of 4, he has implemented his dedicated work ethic as the foundation of Mo Insurance and has made his business practices based on relationships and customer service. He has been an entrepreneur his entire life and has a Bachelor of Science from USC in Business Administration with an emphasis in finance and entrepreneurship. He has entrepreneurial experience in a few industries, including construction and real estate development. He enjoys working with his business owners who are like-kind and like-minded and strives to truly understand their business model while educating clients along the way to help make the best decisions for their business needs. Mo Insurance specializes in real estate and development space with an emphasis in multifamily. His strong relationships based on honesty and transparency allow Mo and his partner carriers to deliver his clients the best possible insurance options. Mikey, welcome to the show.
Thank you. Thanks for having me, Sean.
Thank you, brother. Thank you for being here. Real quick, just so the audience knows, I know that you started developing properties out in Mammoth, and my understanding is you were doing quite a bit out there. So I just want to understand a little bit better, how did you end up becoming an insurance broker today?
Sure. So I grew up in the restaurant space. It was a passion of mine to be in that industry growing up. And then in 2004 or so, I ended up selling my house, restaurants, and we moved to Mammoth Lakes, California. Kind of got out of the rat race. I was in my early 30s, and just was time for a change. Made friends with a gentleman that owned a real estate agency up there. Long story short, ended up developing some projects. 2008-9 came around. A little bit of bad times, some bad decisions, a bad partner, mistrust, and kind of learned that, liquidity went away. I used my savings to pay for some of the properties that I owned to try to hold off. And the time it took for things to come back was a little bit too long. So I lost everything, moved back to LA to be closer to support systems with a newborn, and had another baby in 2010. Fell into insurance, which I think most people kind of fall into. It's not planned. Fell into insurance because of one of my best friends in 2011. Worked as a producer from 2011 through middle of 2015, and realized that culturally it wasn't the best place for me where I was at, and I felt like I can do it better, and I didn't have to drive from Westlake Village out to Beverly Hills every day. So started Modab at end of 2015, and it's been about 7 years or so. It's been a really great journey. I get to work with people I like. I get a vicarious entrepreneurial outlet. So I get the ability of being a part of a lot of different businesses. and I get a social outlet. So just like the restaurant business had a big social outlet for me, I get that as well in my business, which I think is a need for me fulfilling wise to create happiness. And it's been great. I think it's one of the best kept secrets, to be honest with you, in insurance. And it's a long-term game. So if you take care of people, you're honest, you're transparent, people trust you, you might not make a lot of deals in the short term, but over time, it kind of compounds, and here we are today.
I love that. And I don't think that just applies to the insurance world. I think any business that you're involved in, that's really the game. And when you become unattached to the outcomes, it allows you to consult your clients at a much better level. You're not thinking about the commission, so you're finding what the best options are for the client, and in return, you get repeat business from them, and they also refer you to other clients. So I love that mindset. I love that model. That's why we're great buddies, because we share that in common, trying to help people in the best way that we can within our field. So, real estate and insurance right now here in the local California area is a very hot topic. And I have clients that are struggling to get insurance. So I want to talk about that, because any disaster area or a place that has like natural disasters, insurance starts to become a lot more expensive. So I know State Farm and a few other insurance companies have actually dropped people from their insurance because of all the fires that we've had here locally. So for the clients out there that are seeking insurance here in our area or next to a high fire severity zone, what is your suggestion to people like that?
Well, right now the insurance market is really hard, and it's not just fire zone that are a problem right now. The property space in insurance has a lot of reduced capacity. There's a lot of players not playing in California, and a lot of it's driven by the rate that they're able to charge. So when you get a decrease in capacity, a decrease of players playing in a certain space, the cost to access that goes up. My recommendation for people that are currently a homeowner and are having difficulties with non-renewals is to work with their broker to find out what options they have. Not all carriers are dropping people in a tough zone today. A lot of the carriers are maintaining their book, or if they're pulling out of the state entirely, they're non-renewing their entire book. State Farm, as of I think it was about April, May, made an announcement that they're no longer going to be writing new coverage in the state of California. And that's probably going to go on until January so they can see where they're at and reassess their book. But they're not non-renewing everybody. California Fair Plan is the basically insurer of last resort when it comes to fire risk. And you're able to get other carriers to fill in the line items that are missing from Fair Plan, because Fair Plan is going to cover you for fire, theft, vandalism, fire related. Let's just say that's the most important piece for the Fair Plan. However, they don't pick up liability. They don't pick up water damage. They don't pick up workers' comp coverage. They're not picking up a lot of the other necessities. So there's something called the DIC, in which farmers, travelers, Safeco, a lot of these other carriers, as long as it's a perceived risk they like, they will blend in with Fair Plan, Mercury, or if those players aren't willing to play for it, there are other carriers or programs designated to help fill in with the Fair Plan to get homeowners or real estate owners what they.
Gotcha. So yeah, that's the thing. Like they're having to resort to the California care plan. So my understanding of the California care plan.
Fair plan.
Sorry.
It's the California Fair.
Okay, Fair Plan. So with that, coupled with these other insurance, their insurance costs have gone up how much percentage-wise?
I mean, look, it all depends. I think everybody's insurance costs are going up, regardless of where you're situated, whether you're in a fire zone or not. So you're starting to see rates increase across the board. I don't know what it's going to cost because it's all driven by location. What year is your home? What kind of security measures are in place? Is it brand new? Is it sprinklered? I mean, there's a lot of different components that are going to go into it. But I would say that if you're a new homeowner or a new home buyer, I would say that you need to do the due diligence on insurance ahead of time and know what you're kind of getting into up front. The other thing I would like to say with everybody listening who owns property and has insurance right now is be selective on the claims that you file. So if you do have a property that is in a semi-brush zone or is in a questionable zone, or you just own a piece of property, be really selective of the claims you file, because if you do file small claims, you have the ability of being non-renewed, and then it would be very difficult to find new insurance. So save the insurance for larger claim issues, not for small stuff.
Gotcha. Yeah, I was talking to a client recently, and it's not so much that she doesn't have insurance. The challenge is going to be when the next buyer purchases that property. So I think in particular to this situation, the insurance cost is going to be $6,000 more than typically what normal fire insurance would cost. So now buyers are having to factor that in, that extra $500 a month that they have to pay towards insurance, which ultimately may affect the buyer's purchasing power in order to qualify for that loan. So the value of this house, which was X, it may now be Y, because of less buyers being able to qualify for that higher rate. So yeah, it's definitely a challenge. It's good to know what your options are. So, if people don't have a carrier or they can't find somebody, they could reach out to you, correct, and find the proper insurance and be fully covered.
They could reach out to me. They could reach out to the broker they're working with. At the end of the day, you've got State Farm broker, Farmers brokers. You've got an Allstate broker. Those are direct writers. And then you have somebody like me who's independent, who doesn't work with those carriers, but works with a handful or hundreds or thousands of other ones, depending on the line of coverage and what it's for. So yeah, they can reach out and basically do the due diligence up front. But a lot of it is just location specific. And even carriers like Travelers have reduced the amount of zip codes they'll write in. So even if it's not brush, they've reduced their capacity because everybody is right now reviewing their books and reviewing their risk and making sure that moving forward, they're able to kind of move in the direction they want to do. So there's a lot of change happening in the space. And I think it's going to continue like that, unfortunately.
Gotcha. To change the topic a little bit, because I know your specialty is multifamily, and a lot of times these multifamily units are owned by LLCs. So I was wondering, as far as like LLC business structures that hold properties, how does it affect insurance coverage, and what strategies can investors use to mitigate risk?
Sure. So look, we write multifamilies, we write lesser's risk shopping centers. We have clients that own 250 single family homes. I think what your question is really applies to anything real estate related or really asset related. The idea being is that if you own 6 properties and you own those 6 properties in 6 different LLCs, well, God forbid something happens in one of those properties. That is somebody dies, somebody gets paralyzed. There's a big risk associated with it. By having 6 different LLCs, the risk associated with that one property is not going to cross-contaminate your other 5. So the good rule of thumb, or the best practice is to have a separate LLC for each property you own, so that you don't have cross-contamination risk amongst them. The other thing you could do is you said, hey, Mikey, it's going to cost me $1,000 a year just for the filing fee for an LLC. I have to get it drafted by an attorney. There's costs associated with it. I have to do my taxes. It's more for taxes. So I'd rather have all 6 properties in one, or 3 properties in one, whatever that might be. Like, everybody's situation is going to be a little bit different. It's also going to depend on how much equity you have, what kind of properties do you want to have a property that's got high risk associated with it, with one with no risk. But the other thing you could do is if you have more than one or two properties on one LLC, you can buy the liability and also get umbrella coverage from a liability standpoint that goes above it. So you have more than the $1 million or $500,000 limit that's normal, and you're carrying $2, $3, $4, $5 million of umbrella coverage to protect your equity and your property. And God forbid something happens, you have insurance in place so that you can continue to move forward and don't have a big setback.
Yeah, umbrella insurance is so key. I have up to $2 million of coverage on top of what I already have for my renter's insurance. So it's so important. It's so minimal to have this umbrella coverage, right? I mean, I think mine is like only an extra $100 a month, I believe, to have that coverage, to have $2 million of coverage. So I always like to be fully insured to the max capacity, preparing for the worst case scenario, hoping that worst case scenario actually never transpires. But better to be overinsured than underinsured.
For sure. What I was going to say was, look, when people are carrying an umbrella and you own a few rental properties that are single family that are going to fall into potentially the personal line space, you're also going to have that umbrella over your auto. I know we're talking about real estate here, but you're going to want the umbrella to go over audio exposure because God forbid you get into an accident and more than one or two people are injured and it's severe. The umbrella, if it's written correctly, would go over your own residence, your rentals, and your auto, and really give you a comprehensive protection that I think somebody who's building an estate and has assets is going to need.
Smart, very smart. Yeah, hopefully mine's written properly. I know I got it before meeting you, so I might have to send that over for you to look at. In regards to like insurance, just kind of a story, what's like the craziest claim that you've ever seen just in general in your years of being in insurance?
Look, we've had some pretty bad losses happen. I've had a pretty large fire loss for one of my developers that was building about 70, 80 townhomes. And they had a trespasser come on homeless during COVID. And I think they started a fire and it was a, $5 million plus loss. We've seen clients' employees die, unfortunately, fallen off a scaffold, for example, work-related injuries. We've seen some severe theft claims where employees have embezzled or stolen money of other clients' money. So I don't know about anything super crazy, but definitely some large stuff. But that's what insurance is there for. And I think that insurance is something in life, health, whatever it is that you want to pay for and never need. So a lot of people are trying to find value for insurance, but my view is you have it so you can sleep well at night. You have it so that if things go awry, that you can continue down your path and not have major setbacks. And God willing, you pay for insurance and you don't use it. And the other point that I think is important is everybody looks at the price tag of insurance. But if you own a business, it's a rental property, it's an investment. At the end of the day, those are all write-offs. So to your pocket, if you spend a dollar on insurance, well, it's not really costing you $1 to your pocket because it's a write-off. So wherever your tax bracket ends up at the end of the year, I mean, really, that's the bottom to your pocket, the bottom line to your pocket. So don't perceive it that way. It's just the cost of doing business. And if one thing I know for sure is real estate is a long-term game. And so if you can stand in the long term and not have setbacks, 5-10 years from now, you're going to be a lot better off than you are today. So try to hedge against the setbacks.
So yeah, absolutely. And most people I think would be in the 30% tax bracket. So that's a 30% savings right off the top that you can look at when you're looking at insurance. Some people are in the higher brackets, but sure. I think for the majority in the 30% range. I did not know this. So you're saying that there's insurance out there that actually protects business owners from embezzlement of employees potentially embezzling money?
Sure. So we had a client that was an accounting bookkeeping company, and they managed people's books, big businesses, and they had an employee that was figured out a way to use somebody's credit card. And yeah, it was over a couple of years, it was $750,000, roughly speaking anyways.
Wow.
But yeah, it's called the crime policy. So you got crime, you have E&O, you have cyber, you have EPLI that protects against employment type claims. So there's lots of different types of insurance for lots of different needs.
Yeah, and let's talk about the cyber insurance, because I had not even thought about that. You just mentioned that. Like, what exactly does that entail? And describe that a little bit more in detail.
Yeah. Look, cyber is going to mean a lot of different things for a lot of different people. So for somebody who owns a few single family homes, you really don't have cyber risk unless you have people's data available for people to come steal, or you somehow are maintaining people's personal data that gets, taken out of your office and used to commit some kind of fraud. So from the real estate side, it's not so much, but it's bigger for people that are maintaining people's credit cards, personal identity, for doctors' offices, potentially law firms, people that are doing business on the net. So it's going to mean a lot of different things for a lot of different people, but in the scope of real estate, as long as you're not maintaining people's private information and it's in a place where people can steal it, doesn't have to be actually online. It could be out of your office and people get people's information. I don't think it's too much to worry about from that side.
I would challenge that a little bit, because there is a lot of wire fraud in real estate. So what I always tell my clients, because you have hackers hacking into escrow companies' emails and sending off wire instructions, titled as the escrow company. But I heard stories. Fortunately, none of my clients have come across this, because I always stress the fact to call the escrow company before you wire any money. Is there any type of insurance that you write towards the escrow companies if this were to happen?
Yeah, so we insure some pretty large real estate agencies here in California and other states, as well as escrow companies. They do carry crime, cyber, E&O, but they're also today calling to confirm information and putting out emails to make sure that people aren't doing that. From a buyer's perspective, there's no insurance for the buyer to have. It's going to fall on the escrow company, but not all escrow companies are carrying the right types of insurance, depending on who they are, how big they are, and what kind of counsel they're getting from the broker.
So I'm probably going to have to get you in touch with Contact Escrow, who I use here locally, to make sure my clients are covered in that.
Or you can just call them and ask them yourself and just find out if what they're doing to prevent that kind of risk. And chances are they have some kind of a 2 key factor or some way to make sure that that happens. And 2, as real estate agents, I'm guessing you're telling all your clients the same thing you're mentioning on your podcast, which is don't send money anywhere, call to confirm. And unfortunate, it's just a way of doing business now, because there's so many people sending you texts, sending you false emails. We get it at my office all the time. I get emails from quote unquote one of my team members, but it's from a different email saying, hey, I moved, I changed banks, can you change my deposit info? They send it to my controller, because all that information is online. So they find that information, they draft something up, and they hope they find somebody that isn't really got their P's and Q's together and makes a change, and somebody comes up on a few monthly deposits.
Yeah, the scammers call it phishing. And it's funny that you say that. I just got a Facebook in Messenger, a message from a past client saying, and she might have, it said, I have an old photo of you that I found, and then it had a link. So that was an immediate red flag, that if she had a photo, she would have just taken a photo of the photo and then sent it. So Yeah, just note to everybody, be very careful on any link that is sent to you. There's even websites that you can copy the link, paste it in there, and it'll test the link to see if it's a scam or not. So just a heads up on that. Another really hot topic is Airbnbs and short-term rentals. So I know Airbnb has a pretty good insurance program from what I understand, because I've had a client who actually his stove, the lady didn't really know how to work the stove. It was a flat grill in the backyard, and she had the gas on way too long without lighting the pilot. And as soon as she lit it, it just went whoop, and ended up burning her a little bit, and Airbnb stepped in. But as far as short-term rentals, how does an insurance company kind of look at that? Is it more expensive? What are the details as far as that goes?
So every carrier is going to be a little bit different. From what we do, it's considered like a motel unit. It's transient occupancy. It's written on a commercial form, and it's written as one unit. So you own 5 Airbnbs. It's like having 5 motel units from a relative simplicity point of view. And from my understanding with Airbnb, they do have coverage, but they also want to make sure you have the right coverage in place. So they're looking for you to be carrying commercial insurance as well, for them to be involved as well. So I would never rely on Airbnb's insurance. I would rely on your own, and it's not too expensive these days. And as Airbnb continues to grow and there's more players in the space, it's not very uncommon. And there's a lot of players in the insurance space that will write Airbnb liability.
Great. And for those listeners out there who are either renting where they live, and let's go into that. Like, how important is it for someone who's a tenant in a property to carry renter's insurance? Why is that important?
Well, look, at the end of the day, you as a tenant still have your own liability. And so let's just say that you leave the water on in your unit and it floods the 4 stories below you. Well, you're liable for that. If the owner of the building's insurance pays for it, they may come subrogate against you because you're liable. So that's a real simple way to put it. I mean, what if one of your friends comes into the building and cracks their head inside your unit and sues you? Well, you don't have any insurance. Look, here's a simple form when it comes to renter's insurance. Most people own an auto. They're paying for auto coverage. Chances are, if they call their broker that's writing their auto coverage, they say, hey, I want a renter's policy. 8 out of 10 times, if you get a renter's policy to go combined with your auto, you're going to get a multi-policy discount. And chances are your renter's policy is going to be free because you're going to get $200, $300, $400 credit on your auto policy. So it's not going to cost you anything extra. It's going to bundle you. By having a renter's policy with the right appropriate limits, and having an auto policy with the right appropriate limits, you can then get an umbrella policy to go over your auto and renters. So depending on your need, depending on your assets, that's one piece. You're going to need it for an umbrella. And 2, it's almost a gimme. So you're basically going to get renter's coverage and combine it with your auto. You're going to save on the auto what it is for the renters, and you'll typically satisfy your landlord request because most of them require it. They may not be checking, but I think you'd be doing yourself a disservice not to have the renter's policy, especially if it's just going to cost you $200 to $400 a month and be for free if you credit it. Now, if you have a bunch of personal property in your renter's policy that you want to insure from fire, water damage, theft, well, then the premiums can go up. But if you're keeping the property low and from a liabilities perspective, it's not that much to get it.
Yeah.
And it's worthwhile. I highly recommend it.
I mean, it's basically free a lot of times for exactly what you just said. So, yeah, people don't realize that. We require it. If I ever lease a property, which I don't do often, but people on my team, I typically have them handle that. We make sure that the renters that are renting have renter's insurance. I mean, otherwise it doesn't make sense for the landlord to go with them. They'll just find somebody else, and at no cost, it's a no-brainer.
It's better for everybody. It really is.
Absolutely. So as far as like we've touched base on a couple things: liability insurance, umbrella insurance. What are some common mistakes that you see when people end up getting insurance on their homes?
On their homes?
Yeah, in regards to like real estate, or where do they lack? What's a common thing that you see that?
So here's a good rule of thumb. One, I understand that you have a professional you're working with, and you're going to take their advice. I also think it's important that by taking their advice, you should really listen to what they're saying and review the forms of the coverages that they're giving. Just because they're saying ABC doesn't mean that you're necessarily going to agree with ABC. It's just a point of view sometimes. So for example, what we see a lot of is that we see somebody who's got a 3,000 square foot home in a potential area, and they have it insured for, $500,000 replacement cost, dwelling coverage. Well, that's not going to cut it in today's market. So you want to make sure you're insured to value. You want to do your due diligence on that. A lot of times you may have somebody showing you a lower limit to show you a lower premium to get the transaction versus really doing what's right. And we had that conversation when we first started. So I think it's important to ask a lot of questions. Don't be ignorant when it comes to insurance just because you have somebody else telling you something about it. Review your coverages and work with somebody you trust.
Yeah. And with the price of construction going up, 50% probably, I would say, from pre-pandemic till now. I mean, what are the insurance agents doing? Like, cause I don't even know if my insurance guy reached out to me and be like, yo, Sean, you're underinsured. We need to talk. Like, what are you doing? Have you had those conversations with your clients as the cost of construction goes up, or what happens there?
Well, it depends on your policy. Some carriers have a 3% or an 8% annual increase to hedge against inflation. But at the end of the day, every broker is going to be a little bit different. We know what it costs to build. There's cost estimators when you're quoting with certain carriers. But, rule of thumb is these days you can't build anything for less than $200 a square foot in California. Chances are it's closer to $300. And in some areas like Beverly Hills or Malibu, it's $1,000. So it just depends on your proximity, your location. It depends on the grade of construction, and it also depends on your carrier. So certain carriers like State Farm are going to have different replacement costs and look at things differently than somebody like a Chubb. So it just is completely different, and it's going to be location specific, property specific. But in my view, many people are underinsured. And the thing with insurance is you don't know what you don't got until you need it. So it's always better to be proactive.
Absolutely. So for those of you out there, take this as a word of advice. Go back and look at what your replacement cost is, calculate what your square footage is, take into account what the quality of construction you have, and then think about it. Think about what it would cost. Maybe you need to reach out to a builder, maybe a contractor. I have a list of contractors that could potentially help you, or just reach back out to your insurance broker to make sure that you're not underinsured, because construction costs have gone up dramatically since the pandemic due to lack of supplies, high demand, and a lot of building that's happened. So, and it's only going to continue. Right now, there's a massive shortage of inventory across the nation. I mean, that's why you have Warren Buffett, who just dropped over $800 million in some of the biggest builders in the nation, and he invested into the supply company of the people supplying all the construction materials to those companies. So I always like to follow the money and see what's happening. That tells me that, I don't know, I'm not here to predict the future, but if Warren Buffett is betting on the real estate market, I don't know. You guys make the call on that. The last thing, I mean, you touched on a lot of stuff today, and I really appreciate it. I mean, you've given a lot of advice. I think the main point is that it's better to be overinsured than to be underinsured, and you don't want to.
You don't have to be overinsured. You just need to be insured correctly.
Correctly.
Right? And I think and all you really have to do is have a conversation with your broker. Most people know what it's going to cost to build, or you can talk to a few people to get an idea. You can talk to a few contractors. Your broker should be able to give you a cost estimator. The biggest point, and I think to lead with Sean, is that some policies have what's called coinsurance, and that means you need to be insured to a certain value. And if you're not insured to that percentage of value that's depicted in your policy or contract, then you could get hit with penalties. So instead of collecting 100% of what you lost, if you're not insured to value, you might only get 60% of it. So every policy and every carrier is a little bit different, but it's called coinsurance. You need to be insured to value. And so what I would say is, if you don't know, call your broker. It's a simple conversation. Review your policy, get educated with it, take a little bit of time. God willing, you never need it, but it's better to be proactive and know what you have than it is to regret not taking the time when you need it.
So I want to, before we wrap this up, I want to touch base on what you just said. So if somebody is not insured to value, the insurance companies a lot of times will only pay up to 60% of what
I'm not using 60% as a rule of thumb. What I'm saying is that if they have a short rate, if they have a coinsurance clause, okay, and you're not insured to value, to meet that 90% or 80% number. So let's just say there's an 80% coinsurance clause on your policy, and it costs $1 million to rebuild your home, okay? And you're only insured for $500,000. So you're insured for 50%. And let's just say you see a large loss. Because you're not insured at $800,000, you're going to have penalties associated with your payout. So instead of getting your 500 grand, you might only get 300. Every policy is different. It all works differently, but you're going to get short rated on it. And so be proactive to make sure you don't have a coinsurance clause or you're insured to value.
That's huge, bro. Yeah. So guys, listen up there. Like, go check your policies, get on the phone immediately, call your insurance broker, all hands on deck, right? So
one more thing, Sean, the other misconception is they think that personal property or insurance picks up everything. It doesn't. So if you've got jewelry, you've got cash, you've got certain art pieces, you have items of value, sometimes it's not picked up by your personal property listed on your homeowners. You might have to get stuff scheduled. So don't just believe that everything's covered. Make the phone call, ask the questions. If you have something of value that's important to you, pose the question, right? Having your head in the sand doesn't go a long way. And you can't just blame your broker for it. It doesn't work that way. So take the time, invest it. It is your asset and it's your liability. And I think being smarter about things and getting educated is going to go a long way for most people because you need insurance. Like, it's just a necessity.
We call that an ignorance tax. And what you're talking about, though, that's a high ignorance tax bill. So we don't like to pay taxes in any way, shape, or form. So Mikey's giving you some golden nuggets there. Go out, reach out. For all the listeners out there, if they don't have the right individual to reach out to, how would they get in contact with you in your office?
Listen, we're at www.modabinsurance.com. We've got a contact page. You can fill something out. We have an office line. I've got a great team. We're not salesy, so if anybody has some questions or wants the second opinion on something, we're more than happy to help.
Absolutely. And Mikey Mo is located here in Westlake Village, California, in Southern California, within Ventura County, right on the border of Ventura County and Los Angeles County. So if they want to come in, they can set up a consult with you through your website and reach out and come meet you in person. Is that correct?
That's correct.
Cool. Right on, brother. Well, hey, thank you so much, bro. I appreciate you. Me and Mikey Mo Dad, we won the branding iron, the member guest tournament for our country club at Wood Ranch Country Club. I had a great time with this guy. I love him, man. And I promise you he'll take great care of you if you guys are looking for somebody. So, Mikey, love you, brother. Thank you so much for being a part of this.
Pleasure. Have a beautiful day. I'll talk to you soon, bro.
Thank
Bye.
you. You too.